Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 16th COT report of 2013. And as usual, we're going to start off with the changes in commercials positions. So here we go. We've got coffee on top with a 43% change in commercials positions, a very large change size. You can see that actually this was, of course, all reports show Tuesday's positions. And since then, we've witnessed some decline in prices. The general picture, though, the long-term picture is bullish. If you look at the COT extreme, the fact that commercials are at such net long territories, you can see back in the past on this 5 years chart, that coincided with a bottom in prices. So basically, the long-term picture suggests that we're going to see higher prices. But it may just be that we're going to be witnessing a short-term decline or the continuation of this decline for a few more weeks even. The next market is gold. We had a 23% change over there, both in commercials and large speculators positions. All this happening after this rebound that we're experiencing last week. Also, we have a 21% change in small speculators positions. Let's have a look at the 5 years chart and see whether we've got an extreme. You can see here on commercials, COT extreme, that we're at a 228 report extreme. Small speculators are at a 635 report extreme. Okay, so these are actually bullish signals if you look at the past. Whenever small speculators, for instance, were at such levels. This isn't even as short levels as we are at right now. That coincided with a bottom in prices. Again, another one over here. So we are actually seeing a very bullish signal. Of course, this doesn't mean that we're going to see high prices right away, but the fact that we are at such levels suggests we may see higher prices. The next market, gasoline, we have a 22% change over there in commercials positions. Here we go. You can see the change size being a bit larger than average, but nothing too unusual. So let's have a look at the 5 year chart and see the extreme. Here we go. You can see that we can talk about a relative one. We had similar large extremes that could push prices higher. At least here, this was a bottom. So it doesn't have to be on this 5 years chart at such extreme levels. It could generate a signal even in between. You can see over here on a 3 years chart, maybe this would be a much visible extreme. So in this case, this is a bullish signal that we can see in gasoline. The next things that we're going to look at, large speculators, COT extreme. We've still got soybean oil on top. We had soybean oil on top for a few weeks now. Heating oil is going to be the next market. So here you go. You can see that we have this. Actually, I'm going to open the 5 year chart. It's more visible over there. We have this all-time COT extreme in this market, but we still haven't seen any price reaction. So the fact that the extreme is widening. And if you look at all participants, I believe small speculators, we didn't have an all-time signal yet last week. But this week, it's basically all major participants at all-time levels. So this is a really strong signal that can push prices higher. Heating oil, the next market, all-time signal only in commercials positions, but a large extreme of 436 report extreme in large speculators positions also. Interesting to see even on this 1 year time frame that commercials are net long, but I believe if we open the 5 years chart, it's going to be even more visible. So this is a really nice extreme that we have in heating oil. Of course, this is a very bullish signal. Just going to show you a few cases when we had such extreme levels in market participants' positions. All of these coincided with the bottoms in prices. And the last market, Dow Jones, we have a 353 report extreme in large speculators positions. As you can see, we are in the middle of a very significant rally. Question is, would this stop because we are receiving a large extreme? We're not at all-time levels, but if you look at the past, for instance, this time over here, we had this extreme. It could put a end for a short period of time. We didn't have a large decline, but it did produce a rebound in prices. This may happen in a few weeks or maybe even next week. So that's going to be all for this week. I'm not going to show any more COT charts, but you can have a look at them at our COT charts page. If you would like to have a more in-depth COT analysis, then check out our subscription service at cotbase.com, where you can add other really important and useful functions to our table. The long-term trend, volume and open interest analysis, COT index, and of course new COT report types, data types, all sorts of really useful functions. So thanks again for being with me this week. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.